Welcome, everyone, and thank you for joining us today. We're excited to have you with us for an important discussion on how AI solutions are transforming compliance in financial institutions and helping organizations meet regulatory requirements more efficiently and cost-effectively. We'll also take a deep dive into advanced reporting tools and how they enable compliance teams to make faster and more informed decisions. We have today with us two highly experienced experts, individuals who have dedicated their careers to fighting financial crime. And I'll let our two panelists introduce themselves.
Sounds good. You want to start, Yaron?
Thank you. Hello, everybody. Honored to be here with Kobe and in this webinar. My name is Yaron Chazan. I'm Vice President for Regulatory Affairs. I work for ThetaRay in the last 7.5 years or so, and I carry on my back 25 years of experience of fighting bad guys, all the way from the Israeli police when I was responsible for counter-terrorist financing cases, through PwC 7 years, consulting many organizations in different types and sizes how to improve financial crime risk management practices, being the head of compliance at HSBC in Israel for 3 years, and in the last years, as I said, in ThetaRay. In addition to my role in ThetaRay, I'm also part of the advisory board of the AI APAC Institute, a nonprofit organization where we help governments to improve their approach to implementation of AI standards and legislation.
Nice. Thank you, Yaron. And just before I start addressing, I want to thank you, Yaron, Vered, and the entire ThetaRay team for inviting me here today. It's a pleasure being here. I'm looking forward to discuss this really important and emerging subjects. Those are really important things to do. And I'm sure that our listener will find it both to be insightful and informative. So, Vered, as you said, my name is Kobe Bambilia. I'm an executive managing director at K2 Integrity, which is a preeminent risk management, compliance, investigation, and monitoring firm. I'm the head of the financial crimes compliance at K2 Integrity. Been working for the firm for the last 6.5 years.
Thank you, Kobe and Yaron. So let's get started. Yaron, with your deep background in both law enforcement and regulatory affairs, you've really seen firsthand how financial institutions must constantly evolve to meet regulatory requirements. So as VP of Regulatory Affairs at ThetaRay, how do you see AI-driven solutions helping institutions meet their regulatory demands more efficiently?
So the involvement in the past few years, both on the business practices of financial service providers, banks and fintechs, and the approach by regulator, both in enforcement and legislation and standardization of practices, always raises the bar more and more in terms of how good should we be as a financial institution in order to face these requirements and to make sure that our board and our management are sleeping well at night to know that we are doing the right things, that we have the appropriate controls. Add to this COVID, that made everything remote. People changed their behavior, changed the way they use financial services, and tensions and instability in some areas, and you find yourself in a totally different ballpark. Why is it so important to the AI aspect and to the way we detect or monitor financial crime? Traditionally, the conservative approach of setting rules and scenarios wherever you think the risk lays was the way financial institutions manage their transaction monitoring, detection of potential risks, etc. But if everything around you changes so much and the behavior both of the customers and the way the services are applied is so dynamic and changes sometimes on a day-to-day basis, how can I predefine in advance exactly how I want to monitor what's going to happen in the future? It was somehow not effective already. All the reports and the surveys showed 99% of false positives already as an industry standard in transaction monitoring. But add to that the dynamics and the instability, so you try with an effective tool to hit as a bingo, exactly to shoot the places of the current risks that are ever evolving and changing. It's an impossible game. AI enables this flexibility. When you use AI, you can put a net to catch all the fishes together, and the net is flexible enough to identify changes in behavior and to adjust accordingly.
And in a more efficient way.
Exactly. So instead of adding more and more scenarios and lowering more and more the thresholds to catch more and more potential cases, which operationally doesn't make sense, you have a smart tool that can adjust and contain all the changes and identify on behavioral basis what is really unusual and potentially suspicious.
Thanks, Yaron. From your perspective, what are some of the advantages or critical processes that could be improved by AI?
So taking what I've just said as a background, and let's translate it to practicality.
Mm-hmm.
So the purpose of doing transaction monitoring is to potentially identify criminal activity or criminal links within the financial data that banks and fintechs provide as services to all the regular customers and normal and good people. But unfortunately, there are also an opportunity for the bad guys to try and enter the system. So they have to being able to have the ability to identify it in order to report it to the financial intelligence units on a country level, for them to enable law enforcement agencies stop criminals and prevent human trafficking, terrorism, etc., etc. So if this is the purpose, identifying and reporting. If I use a rule-based solution, what do I have? A very narrow view of reality. Only a certain amount for a certain behavior I want to detect. Let's say that the analysts who investigate those alerts receive an alert from a high-risk jurisdiction above $50,000. What is their immediate goal? To verify if this specific alerted risk has a potential story behind it that's worth reporting to the regulator. Mm-hmm. But they have to resolve the specific risk. Now, I heard many people from FATF, from the Interpol, saying many times that one transaction alone is never enough to reveal a crime. So the analyst will go and try to investigate. They have in their procedures today, Kobe is probably very aware of that, all the practices of how to look, all the activity in the last few months, other counterparties that this customer is engaging with. They do try to look on a wider spectrum, but at the end, they started with this risk that they must decide if it's strong enough to have a case or not.
And also, it's only the data that it's available on their side, and not on the other one side.
Exactly. Now, if I start with a multidimensional detection, meaning I don't aggregate one transaction to see if it matches a threshold, I aggregate the entire activity of the customer for the entire week or months or whatever. So anyway, I have a wider picture to look at the beginning. And if my tools don't measure only a specific dimension of the data, let's say the geography part or the volume or the sources of fund, it measures everything together, I don't provide the analyst with a potential risk based on a specific threshold. I provide the analyst already with a story that contains different angles that he must have verified in reality, but now at least he starts by viewing them as potential risks and not the completing information for the specific transaction that was alerted. So this opened the eyes of the analysts to have an understanding of additional risk indicators that were anywhere in the data. They were there, but at least ThetaRay highlights them together without a threshold or specific limitation.
So I'm sorry I'm interjecting, but would it be fair to say that now the analyst, what we call the level one, instead of in essence starting from scratch, the system already highlighted for that individual, for her or him, sort of like the system becomes level one. And now the analyst, the original level one, can have a broader information and sets of data to conduct its investigation.
That's a brilliant way to describe it, because if we start perceiving theoretically the system as the level one, so anyway, the analyst will receive a richer information to have a wider view, as I said, which is exactly what's needed. Now, another point to it, let's imagine those facts are already in the data. So even if I looked at them only because of the narrow approach of the single scenario, there could be a chance that certain analysts would ignore those facts in the data. But now when they are highlighted as part of the alert, you have to pay attention to it.
So you're also able sort of like to control some of the subjectivity
Exactly.
of the specific analyst rather than now you have the more objective approach, at least at the level one.
And now it goes to the second level,
right?
like Vered asked about reporting. So if I was an analyst and I received an alert from a rule-based system that really highlighted a good case, and even eventually I decided to report it as a financial institution as a suspicious activity report to the FIU, this process that started with a rule may keep the narrow approach all the way to the reporting. And at the end of the day, the law enforcement agencies could have received additional information on people that are linked or entities that are linked to this account, to potential people that are involved in the activity. But you could have seen them not by the specific scenario that was alerted, but one to all or many to one feature that can add additional information that once you see it, you say, I cannot ignore it. But you have to see it. If you don't look at facts, you probably will not identify the risk in the facts. So then when it goes to the reporting mechanism, the reports could be much richer and meaningful. So the FIUs can really receive cases that can help them decide if to drive a criminal investigation or not. And if they decide to drive, they need less queries from the bank or the fintech. Give me more information on the people related. Give me more information on the historical activity of the customer with specific geographies. They already have it. So I think the entire phases of the fight against financial crime can improve dramatically only because you use, like we said, an AI-based solution or a system that can highlight many facts at one event.
That's good. We discussed obviously the regulatory demands and why AI adoption supports that. We also discussed the advantages from a practicality perspective in terms of the processes and how much improvement can result. But what about the regulators? You mentioned FIUs numerous times. What is their approach on this adoption of AI when it comes to financial crime?
So we see a different range, a wide range, I would say, of messaging from different regulators and stakeholders. And I include in this topic not only the official regulators that define to the financial industry what is the level of expectation and what are the specific requirements. As we mentioned several times, there are the FIUs, side by side, the regulators that define the requirements and can enforce them. The FIUs are the consumer of all this process with the suspicious activity reports and the CTRs and so forth. But I see that in different areas, there is different approach to AI and openness to the use of AI. Now, it's a bit strange. People see in many cases regulation in the financial industry as something that slows the business or blocks some business activity potentially. When we see the evolvement of technologies today, banks and fintechs in various territories are concerned with moving ahead without knowing that the regulator would accept what they are doing. So regulation can be the driver to do it right and to give the confidence to the financial institutions how to do it. Now, if you look at the Wolfsburg publication recently on suspicious activity monitoring, it concludes something that the industry have explored and understood for the last 3 to 5 years. So they give a lot of weight on the importance of using advanced technologies. And they also explain that moving there requires a dramatic change in the mindset. So banks and fintechs that move to machine learning and AI do not need to expect to mimic exactly what they've done in the past, because otherwise, why do we change the approach? So even basic questions that in the market are always asked, isn't the first test of the new system should be that I caught exactly all the SARS that I had potentially caught with the old system? I say no, because we just explained the investigation process and the process to reporting. If I had a case, a good case, that started with high-risk jurisdiction in the old way, with a rule and scenario for high-risk jurisdiction that revealed something that the financial institution decided to report, it says nothing on all the other alerts on high-risk jurisdiction. It says something only about the specific story itself
client or the specific counterparties.
and the facts that were generated around the case concluded with the SAR, not the alert. Now, this is why I'm saying that trying to mimic the SARs of the past that are totally subjective, as you fairly said, and they actually generated not because of the way the system worked, but because of other facts that were identified later. So what are we trying to continue with? If we can take the investigation process, embed it and enrich it with the technology, and I love the term of let it be the level one, and then investigate those cases, we don't need to mimic neither the SARs nor the processes in the old way.
It's clear that AI's ability to handle vast amounts of data and identify real threats has tremendous potential to ease the burdens on compliance teams like you referenced. And Kobe, as head of financial crimes compliance at K2 Integrity, you work closely with banks and fintechs. What have you observed as the biggest compliance challenges they face when it comes to transaction monitoring, and how AI specifically and machine learning can help them address these challenges?
So very Yaron, I will divide this question into two. First, let's understand the challenges, understand the problems, and then how can AI help us with all of that? So with your permission, Yaron and Vered, I want to state the obvious, okay? And the obvious is that the transaction monitoring is considered to be one of the cornerstone of every or any AML CFT effort. Together with the EDD, those are really the basics. So hence its importance, right? When you have something that is so important, it's a cornerstone of your program, right? And there's so many elements, as you said before, because it's not just the alert, okay? It's like the data, what we're doing with the data, how it's being digested into the system, alerts, cases, and so until at the end, you're having there are so many elements, okay? Important, enhance the challenges. So I think I can put it into some of let's say several key factors that really attribute to the challenges. First and foremost, it's obviously the volume, okay? Especially if we take the big conglomerate banks, we're literally talking about millions of transactions a day, millions. Different channels, okay, of activity and geographies, right? I can go to the teller, I can use the ATM, I can use my app, credit card, log into my account, and so and so. Diversity, right? The diversity of transaction, cash and checks and ACH and wires. So take all of that, volume, channel, diversity, make it obviously challenging and difficult to analyze the data in efficient manner and also in accurate manner. Second is the quality of the data. Yaron, how many times we heard in our career the phrase garbage in, garbage out, right? But it's true. It's true. You can have the best, literally the best transaction monitoring system in the world with the best AI, okay? Your output is still dependent on your input, okay?
Definitely.
So data, any kind of data quality issues like, incomplete, inconsistent, erroneous data will have severe impact on the effectiveness of your transaction monitoring program. So it's very important, clean, consistent, accurate, and quality data, definitely essential, but often, hard to get or difficult to achieve. Third, and you mentioned it before, the ever-evolving regulatory landscape. Okay, regulatory expectations are constantly evolving, constantly change. As you say, the bar keeps being higher and higher. They're raising the bar. And what the financial institution needs to do, they need to adapt quickly, okay, in order to stay compliant. That's obviously what it necessitates significant resources, right? And putting the time and the effort and the resources to make sure that you update your monitoring program so it will continue to be aligned with the latest regulatory requirement. Four, that goes back to why I started in this discipline of compliance and AML and CTF. And Vered, you really started this whole conversation. I think it's very important you started with that. We're here to fight bad actors. We need to fight here criminals, right? Money launderers are intelligent people, right?
Sure.
And criminal organizations constantly, the same way that we do things, and we want to outsmart them. They want to outsmart us. They want to outsmart the financial institution. So they also keep developing new methods to evade detection. They don't want to be caught, right? And they don't want to be covered. So it started with something as simple as structuring, but then you have trade-based money laundering and prepaid card, right? And using shell companies and complex structure. And today, even exploiting new technology such as cryptocurrency. So this require, and AI can definitely help us with that, not only in advanced monitoring, but also systems that can be proactive, okay, to threat intelligence, okay? And later on also discuss about the adaptiveness of the AI. The fifth element, or the fifth challenge, and I think that's the holy grail, it's the balancing, okay? It's striking the right balance between a system that doesn't generate too many false positives, but still catching the suspicious activity. Obviously, if you have a system which is too sensitive, that will generate a high volume and number of false positives. That's going to overwhelm your compliance team and leading to inefficiencies because now they have to spend so much time and effort on that, and they may miss the actual threats, right? On the other hand, you go over lenient, you will miss probably potential illegal activity, which will increase your risk, but also will expose you or the financial institution to regulatory scrutiny. 6, by the way, I have 8 in total, so we're getting close. 6 in the integration, and Yaron, we probably can speak about it for 24 hours, but it's the integration of legacy system to modern system. You have something like a modern system technology like ThetaRay, right?
Yeah.
This system still needs to speak, right, with legacy system in the bank, right? And
Definitely.
it could be something like an outdated system that this is the transaction log and the transaction ledger, right? Still, the modern advanced analytic, they need seamless data, they need continuous access and strong data lineage. 7, it's the multi-jurisdictional operation, especially when it comes to large bank, and both K2 Integrity as well as ThetaRay working a lot with big banks with global operations. And over here, it becomes the challenge of how to effectively coordinate transaction monitoring activities and maintain a cohesive global compliance strategy.
Yeah.
The 8th is probably the most important because it sort of like summarizes it all. It's the resources and expertise, right? The need for continuous investment in skilled personnel, right? And technology like AI, like ThetaRay, in order to address all these challenges. But that's also created a challenge of its own because now you have an issue of retention. And obviously the same thing that your AI model, okay, the machine, still learning, right? And it's the machine learning. Also, you need to train your team to be up to date. So to overcome all those challenges, I think we'll need to look at that at the multi-layer approach. The first is advanced technology, like what we're discussing right now, resources with applicable skill sets, including training, strong internal control and processes, those are always important, and also strategic partnership with experts that can help you.
You mentioned reporting, and one of the biggest challenges compliance officers face is ensuring their reports are not only compliant, but they're also actionable. Just on a side note for those listening in, as we address the topic of advanced data visualization and reporting tools to come, I recommend that you prepare your questions and start sending them in because we'll definitely take 1 or 2 from the audience before we wrap up. But Yaron is someone who has been on the regulatory side and understands the importance of reporting. Kobe, similarly, what do you think are the biggest challenges AML managers face when it comes to generating those actionable reports, and how AI-driven reporting tools can really solve some of those challenges?
So I will take the journey that you started taking us, Kobe, with the overall challenges that you very well summarized in the 8 points. And I will.
There are many more, by the way.
Of course. If it would have been an easy game, there would be less crime in the world.
Correct.
But it's not an easy game. At the end of the day, the expectation is to take bankers, business leaders, financial institutions, that their expertise is not an investigation capability. Their expertise is how to offer financial services to you, to me, to Vered, to everybody. and to require from them very high standards of detection and investigation to be like the first shield of humanity to block or slow down crime. So that's a challenging game to play from any angle that you look at it. But I'm taking those points that you mentioned, and I want to look at it for a moment from the owner of the financial institution point of view. They ask their BSA and AML officers to be efficient, to be cost sensitive, to be operationally.
Sometimes too much cost.
Of course. I always say that in most cases, business leaders, if this would have been the right way or the right cost center for compliance, they always ask to be a little bit less than that and to be more and more effective as possible or efficient, honestly. Then this is exactly the size of the fine. And then this is the size of the remediation. So starting with cost as focus will lead you to pay much more. We have seen it in many cases. Now, financial institutions are not...
The famous 5 Ws of
exactly. So financial institutions sometimes do not need to go all the way far to understand if it's related to drug trafficking or human trafficking. Although I believe this is the direction in the next few years. If you get indicators for human trafficking, you investigate a potential human trafficking case. If you have indications for fraud, you may be able in the future to investigate it as a fraud case, not as a money laundering, as a general term. But today, this is where we are. This is reality. Again, we can have visions and dreams all the way to 2040, but we're in 2024 and approaching 2025. And as always, baby steps. We want to be at least few steps better in the next year or two, and then to see how we move forward. Unfortunately, the industry is way back in most cases. So in terms of the reporting and the AI to the reporting, if you establish the detection on smarter tools, multi-dimensional analysis, as I said in the previous question, add to it the network analysis and the entity resolution, meaning that if I know, based on the case, immediately I tell the analyst, your entity was working with this and this and this and this and these entities, that all of them were alerted, or some of them, you can even show the analyst, already suspicious in previous cases. That brings another light to the case, to the story, because it's subjective at the end. The decision whether to report SR or not, how severe it looks, those things can really highlight if there are factual events in the data that you own as a financial institution, means you are responsible for, that gives you the entire story. So I believe that it will improve the reporting in terms, okay, the structure of the report is very strict and very well defined.
We're not here to change the format.
Exactly. It's not about the format, but how to feed it with the most important facts. I think this is where the industry is missing a lot. And this transition to machine learning AI can improve dramatically.
Just on your last point, AI and machine learning have enhanced detection and complex pattern capabilities that most likely, the old tradition rule-based will not have. One of the examples I wanted to share, but you beat me to that, is what we call a network analysis, right? The identifying of suspicious connection between accounts and entities, which I think it's something that AI and machine learning really excel at. So if we take an example of high volume of transfer and transaction between multiple accounts that on the surface, there seems to be they're not related, they're not connected, but then if you're looking through hidden intermediaries, you'll be able to see a bigger picture, say, wait a minute, there's some connection over here. And to your point, now the SAR, instead of just looking at a set of a fairly relevant and small set of transactions, you all of a sudden now the SAR is much more comprehensive, robust, and include all the relative information and data pieces. One of the things we mentioned, but I think it's important just to say again, because that's really the holy grail, the reduce of false positive. AI, machine learning powered system they can better distinguish between normal behavior and truly suspicious activity. And obviously, that will reduce the burden on the compliance team, which now, you know what they have? They have time to focus on the genuine compliance concern and also better manage the evolving regulatory landscape, the day-to-day requirement and challenges. So it's fair to say that if you have a good technology on top of the human will always be the base. But if you have good technology such as AI and machine learning, now those systems, these analytic tools become really a force multiplier to your team. And that's very important. I want also to mention, I said it briefly just like a couple of minutes ago, but the adaptive learning, okay? This like game of cat and mouse, right? Rule is rule. You can create new rule. But if you have a model that can absorb new data, right? And in turn now allowing the financial institution to respond more effectively to emerging financial crimes technique, right? So because the bad guys, they're trying to come with some new method, right? The system, even being fed from outside information, right? Data that is available on public domain can sort of like try to train itself, that's the machine learning part, and identify those anomalies. Last thing, or just one before, the enhanced R mechanism. You mentioned that that's very important. We have to remember that at the end of the day, the transaction monitoring program, many steps, some of them in sequence, some of them in parallel, but at the end, you want to have the most comprehensive, robust, and complete SAR. The SAR is really that cornerstone that help the regulators, they help the investigation agencies. So using advanced analytics can definitely help ensure that the SAR is comprehensive, high quality, also have all the necessary information, the famous 5 Ws, which then in turn aid both regulators, but also law enforcement to have their investigation. Last, increased collaboration. I think this is something that also the market and the industry is going through. So the trend to include, consortium, federated machine learning, data pools to improve the collective ability and detect threats. One of the names, if I may mention, we have very close relationship with Consilient at K2. You also work with them very closely. The idea over there is you can share behavioral insight to improve the overall risk management and detect anomalies, all of that without the challenge of sharing the data.
I love this point because many customers asked us, so you take things you've learned in Santander, for example, and you can apply it in our bank. And the first thing they think of is that if we find bad guys over there, they can know who are the bad guys. But that's not the case at all. Once, it's not allowed and it's illegal. But second, it doesn't really matter because if I learn the patterns,
exactly,
I can apply the patterns of the behavior to somebody else's data, but let the algorithms or the machine learning learn on the normality for those specific entities, those customers of these other financial institutions, and see which patterns resonate with their behavior. It takes us even to a higher stage of a pattern-based alerting. So if I was converting rule-based scenario that was unidimensional to machine learning that can show me few changes or anomalies or unusual behaviors in different dimensions, I can also decide at a later stage that only a combination of 2, 3, or 4 risk indicators can really indicate a crime or potential for a crime. And why is it so important? We had a case that was published of an implementation for detection of human trafficking specifically with Santander in the UK. How the model is being designed, each of the signals is very weak. Each of the signals alone could not contain a case. So patterns of combined signals of risk indicators together, when you look at them, you don't even have to be an expert. You say, wait a minute, something is really fishy here. If I see somebody bought many SIM cards, if the use of credit cards is only in certain hours of the night, If some cards are being used or payments are being used in different places at the same time, and sometimes places that are more connected with sex slavery or whatever the crime was in that case. And when you look at these together, you say, wow, if you would try to translate it to unidimensional or rule-based approach, you had hundreds of false positives. So that's the big difference. So the federated learning, the ability to apply how the behavior reflects the risk, is the basic. It's what we should do in the financial industry anyway, because we cannot yet move personal data between financial institution to another. But then if we can also apply a pattern-based detection, imagine how efficient and effective it could be.
Agree. And that's one aspect, but I think the twofold is that if you're using those federated machine learning, they can identify and analyze patterns, to your point, that are associated with specific segment. Okay, I think the best example, money service businesses, right?
Definitely.
So now you can detect customer who exhibit the same pattern, they exhibit the same behavior, but guess what? The bank or the other financial institution did not categorize them, not put them in that segment.
Yeah.
Now, to your point, it's not that I need to share the information. I have your own over here. Do you have your own? No, all I'm saying is that this is how this segment act, okay? This is the normal behavioral profiling of this segment. Do you have someone at your bank that behaves the same, but it's not being identified as such?
So I know, Kobe, you work with many financial institutions around the globe. There might be some inherent reluctance from financial institutions to adopt and embrace these new technologies. So what can you advise them, and how you can sort of see how this type of technology can assist in their AML efforts?
So let's start with something that it's close to you, Yaron, you Vered, to ThetaRay, advanced transaction monitoring system, right?
Yeah.
Modern transaction monitoring system that are powered by AI technology that can process and screen millions of transactions, in real time, okay? That's very important. Here's how technology, you can harness technology to help you. Second, AI and machine learning technology that can help detect complex, evolving criminal patterns. That's the adaptive part that we spoke about. Very important, something that most likely rule-based will not be able, because you have to come with a new rule. The machine learning part can, from its name, can come and adapt to the new rule. But I think it doesn't just end there in the transaction monitoring arena. If you're looking at compliance as a whole and all the aspects, all this piece of the puzzle that we call compliance, the technology can also help us with, for example, identity verification and KYC solution. We're all very familiar today with the biometric technology, either facial recognition, fingerprint screening, other biometric tool, which definitely strengthens the KYC process. It can also help us avoid and prevent identity theft, because when I'm using my finger, okay, it's most likely me rather than someone else, also ensuring that only the legitimate client access the account. On top of that, let's face it, every time that I'm getting into an app and they're asking me for the actual password, I'm really annoyed, because I don't remember the password, but I do carry a fingerprint. So this is where the industry is going through. Real-time risk assessment. Yaron, you and I had a discussion about it, I think about maybe like a month ago. You know, we're very familiar with what we call the traffic light, red, yellow, orange, or green, depending on what colors you like, and we call high, medium, and low. So obviously, we're going to continue like that. You need to put your clients into different segments, and high, medium, and low actually makes sense. But then usually what comes with that, or what follows that immediately, is a specific review cycle, okay? High, let's review every 1 year, medium every 2 years, high, low every 3 years, and so and so, right? But if you really harness machine learning capabilities, AI capabilities, you can have a real-time risk assessment, an ongoing one, something that you don't have to wait. You can still look at it every year just to make sure that everything is there, but you can do it for both existing and new client, and that will be based on the transactional activity, but also on external risk indicators. So you have something that it's ongoing risk-based approach. And I think this is also what the regulators keep saying. Don't look at that as sort of like a stills picture. That's a video, right? You need just to continue looking at it on an ongoing basis. One thing that I found also very fascinating, and I think we started seeing the beginning of that, is the use of NLP, natural language processing, and text analysis. So we're all familiar with what we call the structured data, right?
Yeah.
Structured data, you have the transactional log, the customer information database, credit card data, and so and so. That's the structure, standardized data. But there is so much valuable information in the unstructured data, which is, you can look at emails, transactions memo, news article, adverse media, and also in different languages, right? Today, it's not that, okay, I'm a bank in country A, and all the relevant information about my client, most likely it could be also a client which is an international one, it's not in the native domestic language. You need to analyze a lot of information. By the way, I can tell you from my experience, you can find valuable information on even individual and entity in a foreign language. But if you look at the name in English, you will find nothing at all. You're using the local language, the local newspaper of that individual entity, you dig gold, okay? So that's something in that I think the NLP and the text analysis will bring us into even more comprehensive and having more valuable data. I want to end with the blockchain. And I'm not talking about the cryptocurrency, I'm talking about the blockchain technology itself. So one, of course, of the known effect and the aspect and the factors of the blockchain is that it's transparent and its traceability. The blockchain technology known to be immune, okay? It's immutable record transactions, right? So it allows the compliance team make it easier for them to trace the flow of funds across different entities because it's immutable. You cannot change it. The next step will also be even using smart contracts, right? They're also on the blockchain, automated, self-executing contracts on the blockchain that can enforce the compliance to regulatory requirement and only being processed if all the elements, if all the requirements are met. So more to come on that. We have an exciting future ahead.
No, thank you, Kobe. You drew some very interesting parallels from the blockchain that could be definitely applied to our discussion as well there. Now we're nearing the end of our session. I want to thank both Yaron and Kobe for their invaluable insights today. And I also wanted to leave some time for Q&A, which now I'm going to open up. There've already been some questions already posted by audience participants. If you haven't submitted your question about how AI is enhancing compliance or improving reporting or addressing any of the specific challenges or topics we've done so today, please do so right now. But I'm going to pick one of the first questions that came in, and I'm actually going to direct it to you, Yaron. It has to do with how we can improve our detection and reporting processes to quickly adapt to changing regulations and ever-evolving regulations, that is, and ensure that all the updates are really reflected in our compliance documentation without major delays or disruptions. So thank you for that question from an audience member.
So in terms of the way to improve the reporting, I think we have touched it quite deep in terms of being able to expand what I can see in my detection, being able to expand what the analyst can see in the investigation process to ensure that my report contains all the 5 questions, but also all the enrichment for the information. I can also want to connect to what Kobe said about the silos, because the risk is potentially coming from the customers or the entities that receive service from the financial institution. There could be other financial institutions, there could be companies, there could be charities, there could be whatever. Today, there is a lot of investment on the KYC, on the onboarding, on the risk identification in interacting with the customer. And there's a lot of investment on the ongoing transaction monitoring. Combining them both is easy. And still, the number of financial institutions that do combine them both together and maximize and utilize the effort to a dynamic process, like Kobe just said, is very minimal. So on the question of the reporting, with the background, the things we have said at the early stage of this, and the ability to connect transaction monitoring, customer risk assessment, I think will lead us to be very, very effective and efficient in reporting SARs.
Thank you, Yaron. Kobe, another question that came in has to do with regulators and their openness to these evolving changes and what's their position on AI and machine learning. I can only envision, for example, like I'm fine with machine learning technology, but the regulators are not, or they'll not understand it. So I just wanted to get your input and thoughts surrounding this based on all of the engagements you have with financial institutions who face similar problems.
I'll start, we mentioned the pivotal, point that, transaction monitoring programs are at this place, are currently at this time. And I think that it would be fair to say that, the use of modern analytic tool, AI, machine learning definitely sparked a significant interest within financial institutions. And I think that it would be also fair to say that at the same time, this change of being open now to modern tools has not gone unnoticed by the regulators. So one thing I would like to mention is that, if you look at US regulators and specifically FinCEN, they are indeed recognizing the potential benefit of AI and machine learning because they understand that those technologies, and I mentioned it before, but I will say it again because it's important. First, allow a more effective monitoring, but by reducing false positive, right? Detecting complex behavior and patterns, adaptive learning, and also enabling, that's also important, faster response. And I would like to mention, I said FinCEN. So FinCEN back in August, right? It was August of 2024, just 3+ months ago, right? They issue a proposed rule that deals with strengthening and modernize the financial institution AML CFT programs. And this specific proposed rule, this publication definitely highlights FinCEN acknowledgement of the value of that advanced technology can bring into the AML CFT effort. The key point of this proposed rule is support for innovation. FinCEN encourage financial institutions to explore innovative technologies. Yet we also have to remember that while AI and machine learning can definitely improve efficiency and effectiveness, FI should always ensure that these models, by the way, like any other models,
Exactly,
are explainable, right? And you still have to have a robust risk management framework to mitigate potential risk, such as model bias, data issue, or systematic errors. That's the data in and data out. Also, that's something that demonstrates the importance of ongoing model validation. But even before, we have the recent proposed rule, okay? If we look at the FRB and OCC Supervisory Release 11.7 back in April of 2011, right? Doing like this, so 13 plus years ago. So it's true, it originally was not written when they have AI and machine learning in mind. Yet, if you're looking at the principles that are outlined over there, are still relevant to AI and machine learning because it's explaining that the financial institution need to establish a model risk management practices, right? Regardless if it's AI, machine learning, rule-based, you have to validate, you have to test it, you have to make sure that the data is being fed as needed. So I think I can conclude it by saying that you need to cater your transaction monitoring program and platform to the regulators. And cater means C, it needs to be compliant, right? T, it needs to be, CA, so C compliant, A auditable. Audit is very important. Documentation is very important. Comprehensive documentation to show that how the model was developed, how it was trained, how was it deployed. Now the T, transparent, okay? E, explainable, okay? You need to show and demonstrate to the regulators in any audit function that the system can provide a human readable explanation of their output. And R, you want to take a guess? It's risk-based, right? Everything has to be tailored to the specific product, services, geographical consideration of that specific financial institution. I usually don't do that. I never read directly from the release, but if I may, because someone asked, and I had the feeling that the idea of regulatory acceptance and approach. So really short, the proposed rule encourage the consideration of innovative approaches. These approaches can include the adoption of emerging technologies such as machine learning or artificial intelligence, allowing for greater precision in assessing customer risk, improving efficiency, reducing false positive, and reducing overall cost. I think the stand of FinCEN is very clear, and it's in essence inviting us all to open our mind and to welcome the new technology as a force multiplier.
And finally, to make the approach and the objective of the business leaders and the risk leaders somehow aligned. Because if you can be more efficient by being more effective, then you serve both purposes.
But then means that you still need to have the initial investment, right? So to be more effective, but
nobody can jump 2 steps ahead without the effort
that's important
to jump.
That's important. Yeah.
Excellent way to end things. We're catering to the regulators, compliant, auditable in terms of our solution, comprehensive, transparent, explainable, risk-based, tailored to specific products and geographies, like Kobe mentioned. And it was really nice that you actually read that sentence in terms of promoting innovative approaches. So thank you, Kobe, for adding that additional lens. But I want to thank those who submitted more questions. We'll be sure to respond accordingly within the chat. But it's been a great conversation on how AI solutions can help financial institutions meet regulatory requirements, improve operational efficiency, like we just referenced, and deliver smarter, actionable reporting on AML-related suspicious activity. So I want to thank all of you for joining us today, and also our panelists, Yaron and Kobe. If you'd like to learn more about ThetaRay and how we can help you optimize your compliance workflows or enhance your reporting tools, please reach out to us. We're here to help and stay ahead of evolving risks and regulations. Thanks again, and we very much look forward to seeing you at our next webinar.